So step one is identifying the service to promote, which we think might be payments in most environments, the wow factor. Step two is heavy above and below the line marketing in the early stages of a deployment. And then step three is on the supply side, actually nudging the agents, the cash in, cash out agents, to actively promote the service and to offer good quality of service. And you do this by ensuring that they're adequately incentivized. These agents have to tie up working capital to pay for electronic value or make sure they have cash on hand. And they have to actually promote the service, an intangible service in their store. Unlike Coke or food, mobile money is intangible. It doesn't stick out when you look in the store. So somehow the agent needs to promote it over other services. And the two ways to really promote these, one, to make sure that their commissions are reasonable. They're making money when they're signing up new customers, maybe $1, $1.50, something to keep them incentivized. And two, they're making enough money for each cash in, cash out transaction. And then lastly, making sure that there's a reasonable balance between customers and agents. You don't want to go out and blanket the countryside with too many agents before there are enough customers on board, or else the agents won't be making enough money and may start to opt out of the system. So on balance, those are the three issues. The wow factor, two, heavy above and below the line marketing, and three, ensuring an adequately incentivized channel. All these things need to be done aggressively up front until the mobile money system reaches this critical mass of customers and then becomes viral, becomes self-propagating, where customers start pulling in new customers and agents start wanting to join the system because they see the money-making potential. And our view is that most deployments in the world today haven't yet internalized this speed to scale point. They're trying to grow these systems too slowly and too incrementally, not investing sufficient amount in these different functions. And so that's one of the Gates Foundation's core strategic areas right now, is working with some of the most promising deployments in the world and trying to nudge them to invest more in the early stage rollout. And then we'll come in with some philanthropic capital to take out some of that early stage risk. But the key is they've got to reach that critical mass of customers within a short period of time. Now, how do we define critical mass? It's a tricky question because what is a critical mass of customers in India might be very different from what it was in Kenya. A couple rough benchmarks we have for this is one, whatever system you're launching, the objective is to reach at least, say, a 10x increase in transactional points relative to the largest number of branches for any given bank in that country. This suggests that you're really trying to make this an ubiquitous platform where poor people can easily access the transactional point. So that is, one is 10x increase in transactional points, and two is 50 transactions per agent per day. The advantage here, or what this tells you is, one, that customers are using the service frequently, and two, the agents are seeing enough business that they're going to want to keep promoting the service and offering good quality of service. So these are two reasonable proxies for what we mean by critical mass. So one thing M-Pesa recognized, which perhaps gets too little attention, is that they needed to reach this critical mass of customers quickly. They recognized that speed to scale was imperative in mobile payments. And so what they did is, in the first 2 years of the deployment, we think they spent upwards of $20 to $25 million in above-the-line marketing, below-the-line marketing, agent commissions, et cetera, because they knew that if they didn't reach that critical mass, they would fall into a subscale trap associated with small retail payment systems. And our hypothesis is that when you look around the world and see lots of deployments not scaling, they, in fact, have the ingredients needed to get there, but they're not yet willing to make the heavy upfront investment to really reach that tipping point. And that's where the foundation thinks we can add some value by working with the most promising deployments nudging their scheme promoter to increase their upfront investment. And then we'll come in with philanthropic capital, potentially large amounts of philanthropic capital, to take out some of that upfront investment risk. And our hypothesis is, our hope is, that 2-3 years from now, we can point to several scaled mobile payment platforms that are rapidly integrating with the banking system so as to offer a fuller range of financial services.